Hi, welcome to mywealth.com. I'm Bob O'Brien. I'm one of the senior instructors with the courses. Welcome to the blog for the day, the 3 biggest stock market myths. Now, the stock market performance, depending upon what month we're in and so forth, has been pretty flat over the last 10 years or so. Of course, there have been some big dips, but if you invested money for your retirement in a 401k or a IRA or for your children's education and so forth, basically your money hasn't gone anywhere in the last 10 years. In the shorter term, you may have had some big losses and so forth. And that's to be expected in the shorter period of time where we may get some poor performance. But basically, the market hasn't done much over the last 10 years, and not too many people are extremely optimistic about the market, say, over the next 5 years, or perhaps even 10 years, depending upon whose opinion it might be. And I want to go through with you some of the myths. But before we do that, I also want to make certain that I'm not trying to encourage anyone to start making trades, day trading, excessive trading, and so forth. But it's also important that we understand how traders think in order to be optimal investors. In order to be good investors, we need to understand how traders think and some of the ideas that they have so we don't get locked into certain ideologies.
As always, make certain that you check out the written blog at www.mywealth.com/blog. Okay, it's been said that a picture is worth 1,000 words, so let's just go through this. This is a chart of the stock market, basically over the last 100 years. This is the early part of the 20th century. Right here is the Roaring 20s right here. You see an 8-year big run-up. And then, of course, this is 1929, and this is through the 30s and 40s, and we had a pretty good market, basically through the 1950s and even into the 60s and so forth. There was some poor times, but we had a nice run-up in that 11-year period. Then we hit around the 60s and the 1970s where we pretty much had a flat stock market. Again, this would be pretty much near that 20-year period. And then here is 1980, and this is up till about 2000. Here's where we're at right now, where, again, the market has relatively been flat over the last 10 years. So this is really important to note because a lot of people that again, have been born in this period, say in the last 50 years or so, are not accustomed to a stock market that goes flat. And therefore, our investing ideologies need to be changed as well. And they really need to be an effect of the performance of the stock market over, say, a 100-year period as opposed to a 20 or 50-year period. And that's why we're going to talk about a couple of the myths here. All right, myth number 1, buy stocks for the long term and you can't go wrong. And of course, the chart we just shown pretty much shows why that's not necessarily the case. Stocks have done well over many 20-year periods, but the big booms have led to big busts as well. Okay, myth number 2, buy and hold. And, again, there's nothing wrong with being patient with an investment. And essentially, that's really where the hold comes in. Of course, you buy some stocks, you hold them, you be patient with them. Just because it's down maybe 10, 15%, it's still a good company. To be patient with the company, that's fine. But unfortunately, hold over the years has been misinterpreted as, go to sleep. And so you never want to turn your back to the market, a sector, or a company. And myth number 3, market timing is impossible. Now, I'd be the first one to say that there's no doubt about it that timing the market is incredibly difficult, and over a long period of time, timing the market perfectly is impossible. There are definitely, no one can see all the angles in the short period of time or the intermediate period of time. But there have been occasions, say like 2008, there were a significant amount of people that were calling for a bear market. That did definitely happen, and they did get their money out of the stock market, say when the market was at down 10 or 20% and decided to go on the sidelines before another 30% came down. And they are a lot better off today. And the same thing can be said for the housing market as well. There were a lot of people that stood on the sidelines, decided not to buy a house and see what happened. And then the market market like that, they really can't miss at this point since it's a slow-moving market. So these are the things, again, you don't want to get locked into an ideology. And that's why you want to constantly be educating yourselves. And that's exactly what we do here. So don't wait. Get in a course. Get educated. Get to www.mywealth.com.
There's one other important point I want to leave you with before we sign off for the day. It's just that you always want to stay engaged with the market. You always want to, if you put money into a 401k or save for your children's education, you want to know what's going on. You want to be spending some time seeing what's going on in the market, making certain that things aren't completely out of whack, and what the general trends are. And it's not really as complicated as you think. And that's what we're here for at mywealth.com. Our goal is to educate our students. So make sure you check out the courses, the investing course, the currency course. They're all very affordable. The personal finance course. You can ask questions directly to me, and I look forward to answering those questions. Again, my name is Bob O'Brien. I'm one of the senior instructors. Have a great day.